Okay, Jim, here it is. I'm sure you got this on your wall. I know you have, what's it called? Centricore, the biotech?
Centricore?
Yeah, we talked about that. I don't know if you've watched your profile that we did in this class. When
I'm
I
not.
did your profile, you got to watch that. Don't worry, I said all great things about you. But I talk about that because you showed that to me when I came to your office.
I
That's
still
the
have it.
one. Yeah.
Here.
The big mistake, because he makes, yeah, look at that. And you keep that to remind you of a mistake you made so you don't do it again, right?
Well,
I
yeah,
mean,
there's a lot of lessons in that cover paper, but go. Oh.
all right, Jim, here you go. Take it away, man.
So I knew
Walk us through Broadcom.
Well, I knew it because it was a big splashy IPO, and it I was wowed by it then, and I knew all the fundamentals. And it took a year or two or more to form this very non-prototypical base. I don't think Bill covers anything like this, but over that 6406, I bought a bunch of stock. I can't remember how. I honestly don't remember how many shares it was. And it immediately, the volume was so great, I felt pretty confident that I had the right thing. And then when it went over the 67.47, I doubled the position. And then when it came over the 75, I put another third on. Like it just was so perfect. It never, look at how tight it gets, just about $90 a share. And the volume's going to nothing. And now I've got real size on. Like this is probably the first time I caught something right and I knew it. And I also knew the fundamentals cold. Everybody was going online to high speed before. Like if you wanted to download a web page, it could take 30 seconds to a minute or two to load one page. So when high speed came out, there was satellite, DSL, and cable. And Broadcom had the chip for all three. And I figured 100% of people were going to high speed. And I knew that they had the chip for it, and it was pretty much airtight. And the stock then corroborated what I believed to be the fundamentals. And it worked so darn well. And then there's a big break in there. I can't really remember where it was,
right,
but I lost like hundreds of thousands of dollars in that break. But it was because of the lockup coming off, and it never broke the 50. So I just held the whole way down. Because the fundamentals enabled me to sit, even though I was losing a ton of money. And then it just came ripping out. Look at the volume. I'm pretty sure that's it, where it occurred in Jan. Is that possible? I might be wrong, but I'm pretty sure that's it. And then it just came out, and it just went to Pluto, man.
So a couple things. So, Richard too, he just said, look how tight it got at like the 90 level.
Look at that. Don't move.
This is, Richard, this is the same thing we've been looking at that you asked him earlier about. Look how low the volume is. It's like half of its average, and it just sits there. And even before that, where I have the first blue arrow, right next to that blue arrow, right up by the blue arrow, that tight right there. What is that? That's tight too. And that's low volume, but you're already in it. And then, so you asked, so I have up here, you made 3 buys, 64, 68, 75. You had 7,500 shares in this stock.
What do you know it and I don't?
Because it's in the book. I wrote the book. You told me. And when you sold it, do you remember this? You sold 6,500 because you kept 1,000 as a memento. And then you said, this thing's trash. Then you finally sold the last 1,000. But you had 7,500 shares.
Well, I did that because a friend of mine caught Amgen, and he kept 1,000 of that. And so I said, I'm going to be just like him, which I should not have done. Sentimental feelings will kill you in the market. But
so how did you, okay, so there's 2 scary trips to the 50 almost. That first one right there, and then the second one there. Mm-hmm. And you've got a lot of shares. I mean, this is your biggest position you've ever had. How many, do you remember how many other stocks you had, or how much of percentage was this of your total account? How much percentage was in Broadcom?
A lot. I think it had like
20, 25?
Yeah, maybe. Probably something like that. And
okay.
Again, something else that helped me was when Broadcom was breaking because of the lockup. My other stocks were kind of filling that hole because they were still going up. So it made it more palatable. I might not have been able to tolerate that so much if I didn't have those other stocks augmenting or helping me out.
So when you got out of it, now we're in March 2000, the market is starting to get weak, right? That you saw that, right?
Yeah.
Or you're just focused on this and going, this big break here. It didn't break the 50 yet.
No, but there was a lot of other stocks that were acting crappy. They were all blowing off at the same time.
Yeah.
I think there was a culmination of multiple factors occurring, one of which I'd made more money than I knew what to do with in one stock. This was the war chest. I mean, this was the real one that built me up huge. I think my account broke over $1 million in like 98. Yeah. Right. And then this one, it just changed everything for me. It allowed me to look at the world differently.
Yeah. So you were, I remember in the book, by mid-March, you were golfing in Arizona, you said.
I was out of there was multiple climaxes. Oh, so many of them.
You said you went from 200% margin to 100% cash in one day. Is that right? Or
probably days? Over a couple days, but I remember I was running about 150 million at Morgan at that time. And the clerks could not believe how I went from, I levered that up. Like that, by the way, that sounds like nothing today. That was a lot of money for a retail stockbroker. And I went from I sold just massive. Like I would call the trader and they'd be like, what now? I'm like, just dump all this stuff. And they're like, your balances are exploding, cash wise. And I'll never forget the sales manager after the top. He's like, hey, you did huge commissions last year. He goes, what are you going to do next year for commissions? You're all in cash. And I go, I might not do anything. Like they couldn't believe that. They bring in the regional sales manager to talk to me, to try to get me to deploy that money. And I just sat through that bear for the longest time. They were not pleased with me at all.
But you did the right thing.
But it was easier to do because I just listened to Bill.
Yeah. Yeah.
And I knew more about commissions.
IBD nailed this thing with the paper and the the market calls on this. They were saying in March, get out, and CNBC, I was kind of new in the market. I ran this thing up and then I gave it all back, everything, and then just a little bit, because CNBC was saying buy the dips, buy the dips, buy the dips. So I was watching CNBC. I didn't know what the hell I was doing. So, but that's a great trade, man. I mean, yeah, that's the one that changed your life, right?
It was
the one that took you over the top. Yeah.
It allowed me to quit my job and start my hedge fund.
There you go. So next is, see, it's real easy, everybody. Just do what Jim did.
It is not easy. I can promise you that.
BEA. Were you in this one? This one was, you were?
They had this stuff called Tuxedo. It was called middleware, where it allowed different softwares to integrate and talk to each other. I was definitely in this.
Now, this one broke the 50 a couple times. That's the 200 at the black line. And then it got support pretty quickly and just zipped back higher on bigger volume. So I don't know. Do you remember where you were in and out of this one?
I really don't. But again, back in those days, I didn't have a lot of money. And so I just had total disregard for money. I just did not. I did not hedge. I didn't really trim. I just rode them.
Yeah. And next, Richard, I think we have a few more. Oh, this one, MicroStrategy. Oh, these are the ones I put the 21-day line in there. That's the 21-day line that whatever color that is. And the 50 is under that. So that was what BEA did not undercut the 50. That was the 21 undercut. But MicroStrategy, I remember this one. Look at that thing. I mean, God, that thing went super. That's a super climax run. But I put in here in the green, super stocks used that 21-day line. And look, this one hardly touched it. I mean, hardly broke it. And then it just, look at that run. And then it was all over. That thing collapsed so fast. Were you in this?
I was not. But Michael Saylor, there was fraud. at this company. And I thought, yeah, this was bad news, man. And by the way, the whole market, there was dozens of stocks. I remember a year later in like 02 or 2002, I was gardening with my wife in the backyard. I'd been in cash forever. And I would just go in the house and periodically check. And I'm watching the tape and I see 5 or 10 stocks that I sold in the triple digits that were in the single digits. And wow. I just said to myself, my God, I can't believe I sidestepped this debacle. Yeah. I mean, again, and I didn't sell the top. Like my account was at least 20% off the equity high by the time I was out. It could have been more. So I did not sell the top, even though I did hammer I sold a lot of climax runs. I think if you can get out within 20% of your max equity, you're doing phenomenal.